Hello and welcome. This is Islam Ahmad. I will be your lecturer today. Today we will be speaking about one of the most anticipated uh, uh, trading commodities, which is oil. Today we will speak about oil trading and how we can trade it and what is the strategies we can use. So by oil trading, we mean the buying and selling of the oil with the aim of making profit. Okay, this can be done by buying the physical commodity, which is the barrel of oil, or by speculating on its price. So as oil is a finite resource, its price can see a massive fluctuation due to supply and demand. So any change in supply and demand can increase or decrease the price of oil, such as any other commodity. So this volatility makes it extremely popular among traders. And of course, that's why you are here today, because you want to know how to trade the oil. So you have to know first that the oil has a role in the global economy. So oil is often referred to as the black gold. Okay, that's because it's critical role in global economy. So this is a primary energy resource. It influences transportation, industrial production, and also its price can affect the whole economy. So if the price of like the petrol you put in your car increase, and also the transportation methods, this will increase everything. So this will affect the economy, and also the for countries heavily reliant on oil export, this may affect, or of course with the import itself. So when we see the oil price, so what is the oil spot price? We have the spot and we have the future. So the spot price is the present cost of buying or selling the oil immediately or on the spot. So we say this because there is other way, which is buying the future, buying the contract by a date in the future. So the spot is the buying or selling of the oil right now. And of course, the future has a date of expiration. So you buy a contract, and this contract has a date. So for example, you say, I want to buy 1 million barrel, for example, this is a huge amount, in 1 month. So you will not receive it now, but you will receive it in 1 month. Okay, this can be done by the broker, which we can give you the option to do, or any other broker. And this is what we actually will be speaking about today. You can do also this oil trading not only by futures, but also by CFDs and by the contract without the actual receiving of the oil. You just want to buy the contract itself. So now let's move on and see the factors that influence the oil prices. So there is several key factors that influence the oil prices. The first and most important factor is supply and demand. So this is the basic principle that affect any commodity, but actually it's play a huge role in the price of oil. So if there is a high demand and low supply, the prices will go up. If we have a low demand and a huge supply, this will push the price down, just like as we saw in the pandemic, where actually the prices of oil went below zero. So when you sell the oil at this price, you actually paying for someone else. So maybe someone now will hear this and say, okay, how this happened? If you are selling something, you have to get some amount of money, at least even if it's $1, but you have something in exchange of the commodity. But because of oil has a storage fees, when you have oil, you have to store it, so you pay to store it. So if you don't want to store it, or you don't have the place to store it, so you give it to someone else for free, or even pay with him part of the storage fee he will pay just to accept receiving it from you. So actually this happened because of the very low demand when we had the pandemic. There is no air flights, there is no transportation, everybody was at home. So because of this lockdown, the price of oil went to all-time lows. So this is the first thing that can affect the prices, the supply and demand. So also we have the geopolitical events, any political instability, in the oil producing regions. This can lead to a supply disturbing. This will cause the price to spike. As just we saw, if we have an issue like in the countries like Iran or in the Middle East, the prices will be going up very, very strongly. Just like we had in the war of October 73, we had this oil pricing going up because of the political events that was happening and the war. So other from that, we have also the economic indicators. So we have indicators just like the GDP, the inflation, the employment rates, the interest rates. All of this can affect the prices of oil. So this is the main three factors that influence the oil prices. Supply and demand, of course, is the most important. The political, geopolitical events, and the economic indicator. At any moment, if you have any issue, if you can't hear my voice or can't see my screen, please send me on the chat. So we have also an impact of the oil prices on currencies. So for the countries that importing the oil, if the prices of oil going up, this will affect the currency of this country. If the country is exporting like the Canadian dollar, it will be affected by the actually it's strengthened with the oil prices. So this is, if you can see my screen right now, please confirm if you can see my screen. If you can't, or if you have any issue, send me on the chat. What you have in your screen right now is the world biggest oil producing countries. This is the countries that produce oil the most. Okay, you have the United States producing the 12.9 million barrel per day. Okay, you have Canada, which produce 4.6 million barrel per day. You have Russia, which produce 10.1 million barrel per day. Of course, you have the Gulf countries, Saudi Arabia 9.7, Iraq 4.3, Iran 3.6, and UAE 3.4, and so on. So of course, we have also Brazil and China. China has 4.2 million barrel per day, and other countries have 22.8 million barrel per day. This is the cake of the oil producing countries. So here you can see the flags of the countries. We already speak about that. So now after we had all this information to how we trade the oil, first and foremost, you have to know that the best time to trade the oil is the American session, and this will be from 5 p.m. Dubai time until midnight. Okay, this is the best time to trade oil because this is the most liquid time in the market. In all the financial markets, this is the most liquid time. Okay, and also this is the best time. And also in Wednesdays, because in Wednesdays we have the announcement of the US inventory, oil inventory. So at this time there might be huge spike moves in the oil prices. Also, whenever we have any geopolitical event or any announcement or any just like this issue we have in the Middle East, this events, when it happen, it can occur a significant price movement like up or down. Okay, so this is the times you can trade the oil in, and there is some fundamentals. Okay, you have this OPEC. Let me give you this again. This is the OPEC countries. Okay, this is the organization which have all of these countries you can see, and when they have a meeting and they have some decisions, this of course affects the price of oil, because if they decided to decrease the production, of course, this will increase the prices. And sometimes if there is what we call price war, where every country is trying to decrease the price, so it increase its production, and that cause the decrease of the oil prices. So this is about the fundamentals. And also we have the technicals. We can use the chart just like we will do in in a minute, and we use some technical indicators just like the moving averages, RSI, MACD, whatever you are using, and we will suggest some indicators. Okay, this was a quick information about the oil and everything you need to know. Now let's jump on the chart. Now you should be seeing my screen, my MT4 screen. Please confirm if you can't see my screen, or if you have any issue, send me on the chat. This is the gold. No, let's move on to the oil, the black gold. Okay, this is a plain chart without no indicators, just the price itself. Okay, this is the 30-minute chart. Okay, let's move on to the daily chart. You see, we're having the big move actually is in a downtrend, and for some time we're having an uptrend, but the bigger move now is in a downtrend. Okay, today and yesterday we have a move from 67 around 67.5 per barrel until now we are around 69.6 per barrel. So this is the price now in a daily chart. What I suggest you to do is to start, if you are now, we have the fundamentals, we know about the fundamentals, like in Wednesday, in the Wednesday and in the American session, you wait for this announcement, you wait for the OPEC announcement, you wait for any geopolitical event or any war event. Now let's talk about the technicals. When we have a big trend, we need to follow the trend. As long as we can, we need to follow the trend. So this trend now is actually going down. So I'm looking for, if I'm looking for this now, I'm looking to sell, not to buy. Okay, we had this gap at the start of the trading week. So technically, we have this rule that when the market make a gap, it should go back to close this gap. So you might now wait for a buying opportunity. Actually, it was very good the last 2 days to have this buying, and set your $70 per barrel or 70.3 per barrel as a target. Right now, even you can have this, like they have a $1 or $2 per barrel, and you can have this for the target. But the bigger move now is actually the going down, or the downtrend. So you need to look for, if you want to go to like a lower time frame from the daily, you can go to like 4 hours time frame. You can go to the from this to 1 hour. This strategy that we call the eagle eye. You know, when the eagle is trying to hunt, actually start by the broad picture, the big picture, and then gradually zoom in. So we start by the 1 day, then you go to the, the downtrend, we have a gap, we have 2 days of going up, this now, and you go to the 4 hours, this is like zooming in, then that we still have this very strong downtrend, but maybe all of this now is trying to consolidate or to close the gap to the 71 per barrel, $71 per barrel price, which we have the gap in the market from our weekend until the Monday. Then you can go for the 1 hour chart. You see here, the price actually was going down. Many times tried to break this area of 66.5 per barrel, and then it couldn't, and it went up until now for 69.5 per barrel. So this is $3. Just to give you this, if you open one watt contract, this will mean the $1 will give you $1,000 profit or loss. Okay, just to give you an indication of how the prices of oil can affect your trading. So you can buy with the leverage, of course, with brokers. You can buy the CFD, the contract for difference. Now in this screen, if I click buy or sell, I'm not really buying or selling to receive the oil, but I am just buying the price, and then I will have to close it, and then at the close I will either get a profit or a loss. So now I can zoom in more for the 30 minutes if I'm, or even a 15 minutes, so I can even scalp or have a trade for the oil. For now, I can see the move is actually strong in the 30 and 15 minutes chart. So this is now an uptrend. If I'm trading a lower time frame and I'm following the trend, I should be following the trend. Okay, but as I like to follow the bigger trend also, it would be better for me to wait for the two trends to go in line. Okay, to be in the same page. So if I'm now having an uptrend in the lower time frames, so I should now be buying, not selling the oil. But if I'm seeing that our trend is actually going down, so I can sell the price of the oil right now on the lower time frame, and in hope of the price will just reverse or get some consolidation. This is now only by trend. Okay, I can also use the candlestick patterns. If you can see here, we have this pattern here, which is giving us indication that the price will move up. This is like a 15-minute candle, a very big red candle, and then followed by two green candles. So, and actually the second one exceeded the previous one and went to the opening price of this one. So this pattern gives me an indication the price will go up. I can buy from here, put my stop loss below this candle. If I went to this trade, the price will move a little bit down, but it wouldn't take my stop loss, and actually it will continue to go up. Right now, you can see here, this candle is actually in the 15 minutes is showing indecision. When you see this candles like very strong up and down move, and then the price actually close at the same as the open price, this is indecision. And the reason of this is, as I told you, the bigger trend is low, is going low, and the down trend in the bigger picture actually is not in the very low time frame. Actually, it's going up, and for 2 days we see it's going up. So this is now for just price action and the candlestick pattern. I can use some indications and some indicators like the moving average, like 50 moving average. So I can have a very simple moving strategy, which is buying above the moving average and sell below the moving average. I can even have a faster moving average. This is the 50. So I will add the 20 or 21 as its Fibonacci number. Let me change the color so we know which one is which. Let me make it red. Now this is a very simple moving average strategy. I can also add RSI indicator with it. So see here, what we are looking for is something like this. You see here in the left, here we have a crossing of the moving average. The 21 is crossing the 50. And we have the RSI moving in the middle. Okay, most people trade the RSI like below 30. It's now oversold. Above 70, it's overbought. I don't like it. I think we can use this, but also we can use the 50%. If we are above the 50, this is a buying momentum. If we below the 50, this is a selling momentum. So we have across of this moving averages, we have above 50 for the RSI. This is an indication that we can buy. Actually, if you buy this, you would put your stop loss below the swing low, the previous swing low, and actually you would ride a very strong trend. Okay, just by this simple moving average with the RSI technique. Also, you can change this. Let's use something like Bollinger Bands. Okay, you can use the Bollinger Bands to do the same. Okay, you expect that the market will, whenever this is an uptrend, okay, because it's going in the upper band. So this is an uptrend. You will wait for consolidation, even in the middle line. When we have a move like this, like the price couldn't go to the lower Bollinger Band, this is a very strong indication that the price is going up in a strong momentum. So I can wait for this candle, this green candle. I shouldn't buy with this red candle. I should wait for this green candle and then buy from here and put my stop loss from here. Okay, if I bought this, I will have all this move. I can move my now, take my target here, or even move my stop loss if I want to ride the trend. If I were to ride this trend, I would been stopped out because the price went down, but I can move up again. You see here again, we have the same red candle, then green candle, then another green candle. I can buy by this candle and put my stop loss below this one. Actually, this one would be very good. As I always like to say, whenever you are using these techniques, use it like an art, okay? It's not exact science. It's not like the number, the prices cannot reach or cannot exceed. No, don't think like this. There is always a possibility that you will lose. That's why we have risk management, the money management, and the stop loss. And whenever we have opportunity, whenever we get the market moving in our favor, we can move with this trend and get a lot of momentum, and we will get more profit than a loss because we wait for this trend to proceed. Okay, any more questions? Okay, today we are speaking about oil, but if you are just asking also about gold, let me open it for you. Okay, the prices of gold today went down strongly just after the economic releases from the US. But if you are asking me, see here, this is a strong move, even in the daily chart. Tomorrow, we are having the very strong economic events. We have the NFP, and also next week we have the US election. So all of this is affecting the gold prices. Okay, the bigger move, the bigger trend, the gold is going up. So I would wait and buy when the market, maybe I will go lower time frame, like 30 minutes, like this one. So I will wait for some green candle and I will buy. I wouldn't sell even if the move is strong. I will wait for a green candle and then I will buy again. I think the gold prices is still going up for some time. Or of course I will put my stop loss like below the 2,707 per ounce. This would be my stop loss. Going back again to oil prices, I remind you that each Wednesday you can take advantage of this inventory, US inventory announcement. You can take advantage of any geopolitical event that occur, and also of course with the economic events that the releases of the United States especially, this also can give you a very good indication. And you can purely use indicators like the technical indicators I'm using right now. I like to use moving average or Bollinger Bands. I think that oil most of the time will respect this, as you can see here. Very few times it break the bands. Most of the time it's working, and it can give you very good indication and very good trading signals. If there is no more question, I will just wait for 1 minute. We always do these webinars in Thursdays. It's free, and you can join us in the upcoming webinar. We always do this at 6 p.m. Dubai time, and we also have this recorded, so you can go to our YouTube channel and our website to get more videos and more webinars like this from our library. Also, after the webinar, you will receive an email with my contact information. If you have any comment or any question, feel free to send me, and I will be more than happy to contact you and to answer all your questions. If there is no more question, I will end this session now. Looks like everything is fine. So I hope this was a good time spent for you, and thank you for joining me. Please join on our upcoming webinars, and I will just be closing and ending this session right now. Thank you for your time, and goodbye.